I want to bring in now Evercore ISI, their senior managing director, Julian Emanuel. And Julian, last week you published a piece, and it was entitled, I love the title of this thing here, "The Impossible Becomes Commonplace." You got my attention. What are you talking about here?
Well, you don't have to go any further than on the screen today. The world's greatest online consumer company, who also owns the cloud as well, gapping higher on good earnings, and all of a sudden people realizing that the story that had been suppressed for months and months and months is part of what's going to happen as the AI revolution rolls on.
How does this happen in an efficient market with all the information out there? Because really, to be quite frank, all we've heard was the experts, most of them have been naysayers. Well, Amazon's up too much, AWS, the consumer part. The only one that's failed this week has been Meta, right? And at some point that may turn around. But Apple didn't have enough AI, it's rocketing higher. Google search engines are done, it's rocketed higher. And you know, this is one of the charts, in fact, you had in your report that you kind of used. And by the way, this report was out before Apple exploded on their earnings. So
we got that one. Yeah. We got that one.
You had a lot of them. Explain this, what you're trying to say here, particularly this side. The impossible becomes commonplace. Is there such a thing as a full speed slowdown?
Look, part of the reason, and look, we were cautious in September and October as well, and part of the reason that we're a little bit cautious now, bigger picture, we still think we're going to 7,750 next year with a shot at going to 9,000, which is truly extraordinary.
Let me stop you right there for the audience, right? It's okay. The market pulls back periodically. You can get anxious periodically. A couple of weeks ago, I had my subscribers at a 25% cash position, right? We took a lot of stuff off the table, and I would say about 80% I wish we didn't, but that's always hindsight. We had huge gains, and we wanted to protect them. But that's your point, right? You do have these pockets of uncertainty.
Right, well, but the other thing about that, Charles, is that when you do that, you put yourself in a position to buy the dips. The way you get wealthy in this business is buying the dips, okay? But the fact is that you go back to April, not enough people bought the dip. So when you get, good news in a market that refuses to go down, that's how the impossible moves, like you're seeing today, moves like you saw the other day. That's how these things happen.
The moves in Amazon, Google, Apple, they're absolutely mind-boggling. These are gargantuan. If you thought of them as aircraft carriers, these are like aircraft carriers turning on a dime. It's just amazing.
And look, it's also a function of the liquidity. You know yourself, $7 trillion in money market funds. And as much as people want to gnash their teeth, we're still talking unemployment at what I believe 4.3, something like that. Generationally low, and the economy has every chance of growing above 1.5%, which is the expectation.
You did have a piece in there that also caught my eye, right? All that glitters isn't AI gold. It's not just AI, rather. What else is working here?
Well, it has been large part that, but if you look at the internals of the market, day in and day out, unlike the late 1990s, where the breadth of the market was bad for 2 years before the tech bubble burst, all of the stocks in general are rising. They're not grabbing the headlines like AI, but it's a very broad-based rally.
You're concerned, though. You're firm. You do this survey with your clients, and you said, okay, what's the next 10% move? And 75% said up, shattering the record, which I think prior was 69%.
That's right. That's right.
So this, in your mind, is sort of contrarian?
Yeah,
people are too excited?
You
didn't send people back their money, though.
we not from April. We go back to April. We let them keep their money. No, look, this is just, again, one of these times. If you're a long-term investor, ignore that. Right. If you're an active investor, you do want to take a couple of chips off.
There's a better question, though. What's the next 100% move? What's the next 200% move? Again, considering that, to me, listen, I love the trading stuff, but I think we've become so trading oriented that people are missing out on grand slams, trading these same stocks over and over again. Almost every sell I've had in my career, I'd say 90% I regret.
Charles, look, again, we say there's a 30% chance that you get to 30 times earnings of $300 or $9,000 by the end of next year.
Is that how we get to 7,750?
That is how we get to 7,750.
So then you're looking for a lot more enthusiasm, a lot more optimism out there, or are we talking about just new rules? Will there be new rules that because these companies are so profitable, instead of looking at PE ratios, should we be looking at operating margins and saying, okay, now they can have a PE at 30, or at least go there?
Well, we don't want to go quite that far, but what we will say is the reason the CapEx is a good thing right now is because these companies are so profitable. And the most important thing about every bull market cycle is the capital markets tend to get really, really, ebullient, quite honestly. And we haven't had this really robust capital market cycle yet. It's just starting.
Wild cards. What are potential wild cards as we head into 2026 or in 2026?
Well, again, to the upside, I mentioned it a few moments ago, is that growth could surprise,
Right.
north of maybe even 2%. And the Fed is still likely going to be cutting because inflation, we think, continues to moderate from here. If you get a growth slowdown, if you get inflation stickier, that's your downside. But again, we see that as a much lower probability.
I got to give you props, man. You have been sort of a conductor, sort of like you remind me of an orchestra conductor. And when it's time to go dun 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 dun, but then when it's time to get a little dun 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 dun, you've held people who follow you have done very well. Thank you so much.
Thank you, Charles.
All right, happy Halloween.
Same to you.
See, the Taj were simpatico.